We're going to turn our attention now to the strength of our fintech sector. There are now over 190 firms in this space here in Scotland. It's an amazing hub for all across the UK and across the world indeed. So who better to tell us about it than from Bridge, Thomas Gillen, the CEO, from Amiqus, Cal Murray, the founder and CEO, and from ZipZero, Mohsin Rahid, the founder, and of course, with Nicola Anderson of Fintech Scotland to keep things going. You see, evolution has not equipped me with eyes in the back of my head. I read what was there, not what was there. So my apologies. You're castless, ladies and gentlemen.
Good morning, everyone. What a fantastic setting, what a fantastic event, what a fantastic discussion that was. Really insightful. Thank you very much. I'm Nicola Anderson. I'm the Chief Exec at Fintech Scotland, and I'm absolutely delighted to be joined by three brilliant fintech businesses on the stage today. I'm going to get them to introduce themselves in a minute. So we talk to Elaine from Amiqus, Thomas from Bridge, and Mohsin from ZipZero. But before I do that, I wanted to take an opportunity, perhaps, to shout a little bit about what fintech innovation is doing in Scotland, what our capabilities are here, and how we're seeing growth. So Michael, hot off the press, a bit of an update. There are 223 fintech businesses in the community here in Scotland. In 2018, there were 26. So we have seen significant growth in that sector over the last 5 years. Built in principle by our heritage in financial services in Scotland. So we're building on that strength, and we're bringing in that innovation and capability to drive the future of finance. We have a range of really purposeful fintech innovators who are striving and driving for change in that world of financial services, right the way across from financial regulation and reg tech, wealth tech, payments, open banking capability, and others. We're also doing quite a lot of work with the space sector as we recognize the opportunity and the capabilities there. And we're seeing more purposeful change in that climate finance agenda. And I can see Snug, for example, in the room today, a really purposeful business in that space. We have seen over the last 5 years £1.3 billion worth of investment into fintech innovation in Scotland. And that number, we hope, will continue to grow. We're going to hear from our team on the stage today a little bit about their investment experience. But our ask, please, is to come and find out more about that broader community, and please continue to invest with us. We have more to offer, and we would love to share that with you. So without further ado, I'm going to hand over. Elaine, shall we start with you? Introduce yourself and tell us a little bit about Amiqus.
Yeah, great. Thank you for the invite, and it's great to be here. Callum would have loved to be here today, but he's recovering up from a very minor hospital procedure, but he passes on his apologies, and hopefully we can man the fort in the meantime. So I'm Elaine Burgess, and I'm the Commercial Operations Director at Amiqus. So Amiqus is essentially onboarding compliance platform. So it supports organizations to onboard staff and clients easily and securely. So this is really important because if you're a user or a citizen and you want to do most type of life events at the moment, whether that's kind of opening a bank account or getting a new job or making a will or buying a house or anything like that, effectively you will need to collect lots of documents that you'll probably have to get out of the attic or some dusty environment, your birth cert that you haven't seen in the last 10 years, or finding multiple utility bills or various things. And then when you do get them, you often have to send them to organizations, probably via email, which we all know these days isn't the most secure of channels, or maybe you even need to go in person with a poly pocket full of documents and have them reviewed by someone sitting at a reception desk somewhere. And then on the flip side, if you're an organization, effectively you then receive these documents, and in reality we often have no way of telling whether they're valid documents. So how do we really know that a passport is a valid passport? We also might want to gather lots of different context about our clients or our staff to determine whether a transaction or a hire should take place, and that's really difficult to manage over email. So Amiqus supports that process. It's an end-to-end platform, not just kind of like a point solution or a traditional kind of IDSP type model. So, you know, we're really excited to be doing that and helping different organizations. We have kind of taken an approach to market that's more on the kind of horizontal side of things. So we work across lots of different sectors, like we work with the Scottish Government. We work with 9 out of 10 of the top legal firms in Scotland, accountancy firms. We work with banking, so we work with Barclays Bank and wealth management businesses like FNZ and others. And we've been doing a pretty okay job at it so far in the last kind of 5 to 7 years since we've started up. So we've doubled growth every year since we've started. And last year, Deloitte ranked us as the #1 fastest growing tech company in Scotland. And we're currently the 5th fastest fintech in the UK. So that's a really great achievement. And that's based basically on submitting your accounts for the last 3 years into Deloitte. So hopefully pretty objective kind of results there over the last while. So as we look ahead, Amiqus, we're really keen to continue to double our growth into the future. We're looking in the next kind of 3 to 5 years at a kind of 10x growth up to kind of in the region of £50 million from where we are today. We have taken investment in the past to get us to where we are today. Not tons, but I think we've done a lot with what we've had. So if Callum was here, he would use the phrase, we've tried to get champagne results from a book-fast budget. So I think we've tried to be as capital efficient as possible. We're very close to profitability at the moment. It's edging ever closer. And we're also keep our burn rates and stuff pretty low. So we're kind of big believers in sustainability. We could have probably gotten a little bit further faster if we'd taken a bit more earlier, I'd say, but we're being as sustainable as possible and as efficient as possible. So, but lots of exciting things to look forward to. We're currently going through an investment process at the moment as well. So watch this space.
Fantastic. Thanks, Elaine. A real success story for sure. We'll come back to some of that in a minute or two. Thomas, would you like to introduce yourself and tell us more about Bridge, please?
Yeah, great. Thanks, Nicola. And morning, everyone. Thanks for your time today. It's a pleasure to be on the panel and talk about scale-ups, which is, I think we'll get into Bridge, sorry, but I think one of the important things that this conversation is around is actually how we can support as an ecosystem. So coming together in events like this is really important. I'm Thomas. I'm CEO of Bridge. We're a payments optimization layer. Effectively, what does that mean? We live in times where we kind of walk in, we'll pay by card, we'll pay by Apple Pay. As a consumer, we don't really know or want to know what happens behind the scenes, almost the plumbing behind that payment. As long as I can walk into a shop, pay for the goods, and go on with my day, I'm relatively happy. But equally, the unhappy path is when you try to pay for something, let's say you're online, and the payment fails, or you're taken to your app for a two-factor authentication, and for some reason, something happens and the payment can't go through. Effectively, what Bridge does is it limits those chances of failed payments and effectively optimizes that payment route for cost optimization, authorization uplift, and basically just ensures as least friction as possible is put into that payment journey for the consumer. So we've all been on Amazon and kind of clicked and all of a sudden you bought something and not realized it. That's effectively what we're trying to do, make a seamless payment journey as least as many clicks as possible. From our customer side, so kind of merchants, so let's say John Lewis or travel counselors or whatever company it might be that you're trying to buy something from, these guys operate in a world that is very, very fragmented. So we see a lot of innovation, some of it happening in this room around different, kind of payment methods, open banking, fraud tools, all these different things that's happening in the world of payments, digital wallets included. And one of the challenges for these merchants is they want to provide the payment choice to customers in the checkout. but they don't really know what's happening as part of that. They don't have any data points. They don't know what is most effective. They don't know what the cost of it is. If it goes wrong, they don't know why it's going wrong. And effectively what we do is we shine a light on all of that. So we provide access through our API to over 300 different payment methods. So that's aggregation, not really that cool. But the cool part is around our kind of optimization routing. We'll take a transaction from a lane, say, we'll recognize actually it's a returning customer, we know who our card issuer is, we've got all this other metadata, and we'll route that transaction to a payment processor that we believe is going to have the highest chance of first-time approval and authorization. So that's the kind of the benefits to the merchants that we work with. And really what we're looking at there is the merchants have got limited choices at the moment. So the third kind of aspect to our stakeholders that we benefit is the payment processors themselves. So we've all heard of Stripe and Adyen and those growth journeys. Effectively, they're good products, don't get me wrong, but they're built on like 70s, 80s, 90s infrastructure. It's dated, it's terrible, and it doesn't work. So effectively, we also work with the kind of processors and acquirers to help uplift their technology as well, and effectively giving them the transactions that they want when they want them at a price they're willing to pay. So we've kind of got a three-sided ecosystem, if that makes sense. We've got consumers pay they want to pay, the way they want to pay, and by least clicks as possible. On the merchant side, optimization for cost and approval rates, and on the processor side, giving them access to the flows they want when they want them. So it's a really neat kind of triangle of stakeholders we've got there. In terms of our traction, we were formed in 2018. We started to commercialize 2 years ago. Enterprise sales is our focus. I think, the great thing about enterprise is once you're in, it's sticky as anything. The sales cycle is challenging. We can touch on that maybe later on. But we're getting really good traction now. We're scaling really nicely internationally. And yeah, it's a really interesting time for the business.
Fantastic. Great to hear about that global opportunity as well. And that was something we touched on earlier in the week for Amiqus too. So Moshin, let's hand over to you. Tell us about yourself and ZipZero.
Thank you, Nicola. And I want to start slightly differently. So my entrepreneurial journey is a little bit shorter than my very successful colleague. So I came to it in a bit of a roundabout way. So my last, what I think of as real or institutional job, I was actually an investor. I was a partner at the SoftBank Vision Fund, where I spent 2 years working out of Asia, really looking at fintech businesses. And the businesses I met, the great founders I was lucky to spend time with, really inspired me to focus on doing something on my own. And that's where I saw a huge opportunity to build what ZipZero is. And ZipZero is really unique in being a consumer data business for a number of reasons. We are a very privacy-first focused business, so unlike a lot of businesses, we do not collect data by making you sign up to some very long, onerous hidden terms and conditions and scraping your mailbox in the background. And we're very focused on a unique depth and breadth of data collection. So we are focused on understanding what people spend across any retailer or any retail category. So to drive our data capture, we have quite a unique consumer value proposition. Our pitch to consumers is, look, there is a vast digital ecosystem where everyone is making huge amounts of money. You're at the heart of this ecosystem. Your data drives a lot of digital advertising, marketing, consumption, but ultimately you're the only people not to benefit in any meaningful way from participation in this ecosystem. So our proposition is very simple. You share your shopping data with us. We reward you for that. You can upload physical point of sale till receipts or send us digital online email confirmations. We essentially extract the data from all of those receipts, aggregate it up, process it, serve it up as raw data or insights. The cash rewards you accumulate for sharing that data can be used towards the payment of any household bill in the UK. So we support payments to all providers, from your mobile phone provider through to your council tax and water provider. So in one way, we have tried to make the accumulation of rewards as frictionless and as universal as possible, because that's what drives our data capture. Every receipt to our users has a monetary value, so you're incentivized to share as much as possible, so we can really understand across retail and across category what you spend down to an individual product level, but actually how you paid. Did you use a gift card? Did you use cash? Did you use a credit card? So really building up that unique, holistic 360-degree picture of someone's financial profile, both in terms of their discretionary spend and their non-discretionary spend. That data we're then able to commercialize with businesses across a huge number of industry verticals. The obvious low-hanging fruit for us is obviously brands and retailers, but beyond that, the data has applications in businesses from healthcare through to financial services. We are quite an early-stage business, so we really essentially launched the first version of our product in time for Christmas season last year. We've grown to user base of 250,000, and on any given day now, we extract data from about 50,000 receipts. And we've now started working with some of the largest retailers and brands in the UK and Europe.
Fantastic. Thank you very much. We're going to talk about that kind of scale-up journey, that opportunity for investment, and perhaps sharing some of the other experiences more broadly as you've grown your businesses. We've heard earlier about the skills agenda, the importance of the board, et cetera, we might touch on some of that. But Martin, perhaps we could start with you, because I know you took a decision to come to Scotland, actually, to start to scale and grow your business. Perhaps you could tell us a little bit about that and why you made that decision.
Yeah, look, if I'm being cynical, we felt there was an opportunity to be a bigger fish in a slightly smaller pond, but actually beyond that, I felt that the ecosystem here would be more supportive to us strategically. And look, that's been borne out. We're starting to do a lot of good work with people like Opportunity Northeast. I feel that whilst the ecosystem is smaller here, it has its benefits in that it's much more collaborative, much more supportive. You can lean on other founders. It's easier. I mean, people complain that the ecosystem is somewhat disjointed, which I agree with, but actually there is help there. It's sometimes a little bit difficult to find, but actually there is a growing community of founders and supporting stakeholders who we felt could strategically help nurture and grow our business, and that's the experience we've had.
Fantastic. And perhaps you could talk to us a little bit about your investment journey.
So my investment journey probably isn't reflective of, I guess, I don't want to use the word struggles, but some of the difficulties a lot of early stage businesses have. So because of my background and because we were originally based in London, we were actually able to, at the startup stage, fund our business really through sort of my network of contacts. So we have, we're very lucky to have quite a sophisticated investor base of private equity, venture capital, banking professionals who not only have been very good in providing capital, but actually have been able to facilitate a lot of strategic access to the stakeholders in our ecosystem. So I've been very lucky in that way, and as I said, my journey is probably not reflective of a lot of the struggles that many other founders have had. Not to say that we found the funding journey easy, but it's been a little bit easier than some might have had.
Is that your reflection, Thomas, Cillian, as well, in terms of that funding journey? What are the lessons, and where are you at the moment?
Yeah, I think I think each journey is different, right? I think that's the other piece. There is no silver bullet, I think, depending on the stage of the company, where you're based, the investor base you put around you. At Bridge, our investor journey is quite different to that. And actually, it's been very positive as a result. So we're actually backed by a family office. And that's allowed a real focus on the technical build-out of the product. So where we really operate is probably as deep tech as it gets for tech and payments. And that sounds expensive, and it is expensive, is the reality. We operate in a place where we've probably got 5 or 6 competitors globally, all in the ranging of, probably have raised over $50 million with some of the leading funds in the world. So we operate in a really neat space where there's a huge potential for growth. And our journey has been really important because we've been supported by a very patient investor. So as Shane touched on earlier, kind of that different stage of the business, but where you've got that kind of alignment where actually that EBITDA flatline that you mentioned, for us, one, it would be great to get to 20 million EBITDA, I'll celebrate that. But two, it's been really important for us because without that kind of deep technical product availability, with the enterprises we work with, so some are turning over 30 billion annually that will be going through our platform. Without being able to have that technical certainty, we're not able to onboard them. So by having that kind of patience through our kind of investor base, it's been allowed us to get the technical confidence to win really large accounts and effectively take Adyen and Stripe out of certain flows.
I just want to touch on one very important point, which a lot of the feedback we had early on in days, people were very focused on when we will become revenue generating. I think there was a lack of understanding that what we are doing is very technical, and we have to build out a product and essentially be able to demonstrate it and then commercialize it. And I think that's often a problem, that actually a lot of early stage investors will want to very quickly see when the revenue ramps up. And look, as an early stage business, you could build out a 5-year forecast, but it's generally meaningless. I think you need the patience and understanding of investors who understand that sometimes the technology has to come first.
Yeah, absolutely. Elaine, let's pick up on your comment about champagne results with Buck Fizz. Money, I think, is what you said. Share a little bit more about that, because you've been very focused on revenue at Amiqus.
Yeah, I mean, I think we've taken decision early on, as I said, to try and be as sustainable as we can be with the funding that we have received. We know that some of our competitors have taken on, like, to the tune of hundreds of millions of pounds worth of funding, and some of them don't exist anymore. They've burned through the funding and are making massive losses, and are in real trouble with investors at the moment. So I think we've always tried to kind of say, you know, like, what's the next kind of 3 years look like, and put a fairly sensible plan around that. So I think that's taken us a long way. I think the other thing, and you mentioned it in the introduction earlier as well, is that we are a purpose-led company as well. So it's also been really important to us to have investment from investors that kind of are values aligned and see what we see and believe what we believe in terms of the things that we're trying to achieve. So, you know, we haven't really been out looking for kind of investment at any cost. We have had in the early stages of investment some exchanges with investors driving what I would say would be exploitative terms in the earlier days. But I think on the round we have had a really positive investment experience overall, and we found, like, Edinburgh to be a really great place to be able to start up and to get going. I think the community here has been fantastic, and now that we're looking to kind of take the next step, we're kind of finding this kind of awkward in-betweeny middle bit, I would say, at the moment, where we maybe have probably outgrown some of the kind of more local angel type syndicates in terms of the number that we would ideally be looking for. But then when we speak to some other investors, they're kind of saying, that's great, but we don't really write checks for less than, 20 million or things like that. And actually there's just this kind of space in the middle that I think we're probably struggling with just now. So we've always taken a partnership approach to investors. We'll keep investors up to date and keep kind of meeting with people and so forth. But, that's really helped us now. We've got a list of probably about 16 investors now as we're going through this. This is our long short list, but probably 1 to 2 of those are in Scotland at the moment, in terms of being able to kind of just provide that level at the sweet spot that we're in the middle, this kind of awkward teenage stage, I would say. So, but yeah, otherwise it's been a very positive journey in Scotland, I would say.
And we think about the ambition that we have across the fintech community in Scotland, and you've touched there about this gap. What do we need to do in the investment landscape to meet that ambition, or indeed is that investment landscape ambitious enough for fintech, do you think, Thomas?
It's an interesting point. I think one of the things around fintech is, if you get the proposition right, the flywheel effect can be pretty spectacular. You're talking about some of the organizations you're working with, and probably you guys, you're not talking about a, 1K MRR account. It's significant. So the opportunity to really scale is huge. Around ambition, I think in Scotland is mixed. I completely agree. I think we've got a missing middle. There's certainly some people operate within there. But almost, if you get kind of beyond $1 million ARR, but you're under 10 million ARR, I think that's on the recurring revenue. I think that's a real challenge, and that's, in all fairness, it probably actually creates good behaviors from the businesses and ourselves, because you need to fight for it. But it definitely feels like that's a challenge in Scotland. When we talk about ambition, I can give an anecdote with no names, but I've heard it a few times here, and I think it's born out of perhaps a limitation in flow. So, you can't have, kind of £500 million fintech fund because, it's not got the home to go to, perhaps. One of the kind of bits of feedback that we received in the last 12 months was kind of like, this is great. It's a global opportunity. There's huge market potential. Market's moving towards you. The challenge is, that kind of makes us scared. And that, to be honest, I was like, that tells me enough about alignment. Yeah. But also, it's hard because you're kind of working on something you think we've got huge opportunity, team's right behind it, and yet you're kind of sitting in that missing middle. And we had others that other people that are then encouraging you to relocate. So there is something, we're really spirited by building a business, a huge successful business out of Scotland. But at the same time, perhaps there's not the alignment of that ambition through the funding community, and that's no fault of anybody. I think it's just by virtue of where we're at.
And we have an opportunity perhaps to start to build some of the fixes, if you like, within that gap. What would some of those initiatives start to look like for success for you? It's a hard question, clearly.
I mean, it's a very hard question, and I mean, I agree with everything Thomas and Elaine have said. I think we have been very conscious of that funding gap, I would say almost from day one, and we've thought about our funding roadmap in terms of actually how do we address that. So we really took the approach that what do we need to get us to product commercialization? What do we need to then get us to, $1 million of ARR? And actually, we shouldn't seriously think about doing a Series A until we can command a valuation in the 9 digits, because actually that's when the funding landscape opens up to us. At that point, we will be more of an international business, and the opportunities will be there. So, I suppose in a roundabout way, we've had in the back of our minds the limitation of the local funding landscape. I think it's great for businesses to help establish themselves up to a certain step, but then you are forced to think about what the shape of your business looks like to attract a more international caliber of investor.
Yeah.
I think as well, there's something about just context and broader perspective. Like, so for example, at Amiqus, we have like 100 million things that we want to do, and it's kind of similar to what Shane was talking about earlier, and we just need to prioritize on the basics. There's a bit that we come back and say, guys, there's all these things we want to do, and there are some things we can improve on, but we're still the #1 fastest growing company in Scotland. Like, we're obviously doing something right. And I think when it comes to the investment kind of community in the UK, there is just something about acknowledging that, there is lots more we can do, but actually it is still one of the best communities to be, starting a business in worldwide. And I think that we should just first acknowledge that we are very privileged and lucky to be starting a business in that context, much as there are things that we can look at ahead. So I think, from an Amiqus perspective, the community has served us really well, and particularly in Scotland, there are so many things that are happening and going on, and big efforts being made, Fintech Scotland and government and various different things. I think one of the things that sometimes we could benefit more is a little bit of kind of navigation around that system, because I think there's so many great things that are out there to avail of. But I think sometimes it can feel a little bit fragmented within the ecosystem in terms of where to go for the right thing at the right time. And I think that's something that we could look to. But again, I think we just need to acknowledge that we are pretty lucky to be where we are as well. So,
I think just building on that, I think that's the really important piece, isn't it? When you're looking for investors, you're looking for more than money. It's the network effect, it's the advisors, it's the contacts, it's the commercialization approaches, it's the professionalization on how you're hitting your numbers and your unit metrics. In Scotland, the great benefit is the network effect is really concentrated. So you can get access to the right people really quickly. So there's a lot of good things that we've got going for us in Scotland, and I think that goes back to actually we should play to our strengths. I think one of the we're doing more and more of is how do we project that to the outside world? Yeah. I know that sounds very colloquial, but how do we? We're doing more and more. I think there's US investors coming along later on this afternoon that's brilliant. You know, I think getting the kind of sharing what's happening in Scotland so that either businesses, investors, or networks can come to us and see it as a real hotbed of activity. I think that's when we'll see a kind of step change. We're already doing a lot of that at the moment, but I think when that really starts gaining momentum, we'll really see a step change in terms of people coming to Scotland as a destination for investment as well.
Yeah, really good point, actually. Builds on some of the points that Shane was making earlier. I'm going to turn to the audience in case there are any questions out there at the moment from anyone. No, we've got a very quiet group today, I can see. Oh, sorry, there's one here.
Hi, thanks for the panel. My name's Mike Reed from Frog Capital, scale-up investor. I'd be really interested in terms of your learnings of interactions with investors and how you can help the audience here navigate, because certainly our experience sometimes is either the challenge is engagement at all. I can't get engagement, I can't get through, I can't cut through. And other feedback is the opposite, which is actually people wasting your time a lot of the time and never then following through.
That's a great question.
I mean, based on my experience, I think one of the issues comes down to how investor ready a business is and for what stage of investment. I think a lot of founders underestimate the challenges involved with engaging with an institutional investor, what the expectations are, both from a business operations, a business professionalization perspective. Actually, are you geared up to have someone do in-depth due diligence on your business? Do you have the management bandwidth and capacity to do that? So I think often it's as a result of a mismatch of expectations. There isn't a realization of how serious a funding process from a real institutional investor is.
Yeah, I mean, what I would add is, like any inbound activity that we receive, I'll always make the effort to take the call with an investor, and that's largely because I think you don't know what you don't know. And the second piece to that is, someone once said to me, you know, investors don't invest in, you know, they invest in straight lines and not dots. And I see that as a communication piece. So as much as kind of going through that scale-up journey, bringing a team, bringing your customers, communication is almost the number one thing. I believe in kind of building that book of investors. And whether it's someone that's never going to invest, and we know that, that's fine. So we've probably got 60, 65 funds that I'll send a quarterly update. The update will be, this is good, this is bad, can we get help please? And actually I've been really surprised, maybe pleasantly surprised, sorry, it paints everyone in a bad light, but in terms of like the offer of support in certain areas, whether it's go-to-market advice, whether it's hiring advice, people that have got no interest in our fund in our company financially are offering up support. So I don't know if that's helpful, but that's the approach that we're taking. Just any conversation is helpful. I think if it gets into fourth, fifth conversations, you want to start saying, right, okay, where are we at here, guys? But yeah, that's the approach we're taking.
I think for us as well, we have been speaking to lots of different type of investors, and I think just having that early sense of what it is that investors are looking for at a point in time is really useful too. So some will rotate very strongly on growth and they're less concerned about profit, others are very concerned about profit and they're less concerned about it. So I think just being able to kind of communicate those just makes it really clear for organizations early. And then I think one of the other things we found as well is around the due diligence bit. Again, similar to yourself, you know, we've had kind of one or two almost like introductory type conversations with investors and with no real kind of prospect of term sheets yet or anything like that, but suddenly they want to see kind of minutes of your board and your product architecture, and you know, like there's this list of like 45 things that you have to go and gather, and as a small organization that it takes a lot to be able to do that. So I think it's just, again, that sense of like intent and kind of feeling like it is kind of like really going somewhere, I think is important. And then I think the last thing, and I'm probably a bit newer to investment landscape in Scotland than Callum would be if he was here, but As a parent, I've been very, like, you know, close to different networks, like, you know, like the Moms Network, right? They know everything about like, moms know everything, right? This is nothing on the Founders Network that I've kind of come across or learned about in the last, like, number of years. Founders talk, like, they know, like, everything about each other's business and everything about investors and so forth, I think. So there's always going to be a bit about, yeah, just kind of due diligence, I suppose, kind of working both ways and just being kind of very conscious of that and in interactions with businesses and, yeah, just kind of having that, like, mutual respect to where individuals are in their journey as well. So they would be kind of just a few things that we've come up against in terms of our experience over the last while.
If I can just add one anecdote, I think some feedback that I've had from other founders, and we've had a little bit of this, is that sometimes there's a sense that some institutional investors just pipeline filling. So, you know, I for one have a principle that I won't send you a presentation. If you're really interested in learning about my business, you can spare half an hour for a call. But I know a lot of VCs would just want to gather as many presentations as they can, and you kind of get lost in the ether. And I know from my own personal experience, once you're on someone's CRM and they've sort of passed, that's it. You don't get an opportunity to revisit that. And I think there is frustration amongst founders that actually often you're not given an opportunity to do your business justice. Someone junior will have a look at a presentation and it will get filed off somewhere, and sort of that'll be the end of it.
Yeah, that's a great point, actually. We hear more broadly across the community of fintechs in Scotland that the due diligence, to Elaine's point, can be really quite significant, time potentially wasteful because that clarity isn't upfront. And particularly as we think now about the broader ESG asks and some of the questions that come associated with that aspect of the due diligence, that can be quite significant. And the other, to Moisín's point, we also hear more about that broader opportunity to actually come to Scotland, come and experience the environment here, which, to Thomas's point, we need to create more opportunities to make that easier for people, for sure. And Shane made that point earlier that we need to shout about it better. Point well made, for sure. But there is that opportunity then more broadly to say, well, actually, we want to come and see, and to take that opportunity to come. We've got a few minutes left, I think, but I wanted just to touch on the skills. Oh, thank you, Barry. I can see another question.
Thanks, Nicola. Barry from the British Business Bank. Elaine, you talked about the awkward in-betweeny bit, which I loved. Thomas, you talked about the missing middle. So we establish a bit of a common language. Can you define in concrete terms what that financial gap is? Are we talking 5 million up, 10 million up? Just so we can all get on the same page. Thank you.
Yeah, so I think in terms of like round size, I would say kind of 15 to 25 is that. So whether you say that kind of Series A extension into Series B, that's where we see the challenge. But that said, it's perhaps more specific to kind of technology intensive businesses where there's, you know, kind of technology looks more Series B, but revenues look more Series A. And that's maybe more of the dichotomy, that's the challenge that we've seen specifically on feedback. But yeah, I would say 15 to 25 in the kind of round size would be part of the challenge that we see.
Yeah, it's funny. I at the moment, I would say the bit between 2 and 15 million. So again, it's a great question to kind of show that alignment. But yeah, we have had, as I said, some investors in terms of round size said, you know, we don't write checks for anything less than kind of 10, 15 million. And we're saying, well, I don't think we're quite ready to spend that just yet. But yeah, I think at the same time, for what we'd want, that kind of angel investor community is maybe not going to be able to rally to the number that we are looking for just yet.
But I think that's a good point, though, isn't it? It's each business has a unique kind of different revenue profile. And I think the best thing that did happen last April, May was the rebasing on some of the things that were happening in the market that caused, you know, overheated, raised too much money. You know, a good friend of mine was literally, they hired 15 people and he didn't know who they were. I mean, he was running the business. You know, they went from, I think, 70 people to 250. And it was, you know, they've had to rebase, and there's been real challenges with it. So I think the benefit is the market is much tougher now. So you need to work a lot harder, and you need to talk about, actually, when are you going to be EBITDA positive rather than just building a top line?
Yeah.
But yeah, I think that is important as well.
It comes back, I guess, to some of the points that Shane was making around getting first base, first principles right. And that sounds as if that's a real journey that you've been on, particularly in Amiqus, Elaine.
Yeah, definitely. We have had lots of, I would say, kind of like conflicting advice, and I think both sides being very, very valid based on the experience of individuals or organizations. One is very much like, build your base, then do international expansion. The others are like, you're the fastest growing business in Scotland, what the hell are you waiting for? Get out and do it now. And I think we're trying to find a kind of sensible middle in between at the moment. We definitely were really clear that we wanted to be the UK's #1 compliance and onboarding platform first, and we wanted to really establish our network, because we believe that the network effects going forward are going to drive our growth. So we wanted to really focus on that first. At the moment, I would say we're the in-betweeny bit, to use that phrase again, sorry, but we are on the journey to seeing like how much global reach that we can get from the UK. So we're probably 18 months into this 3-year journey to be dominant in the UK. So we would be looking to international expansion in the next 18 months. But between now and then, we're looking to say, well, actually, for example, we want to be able to serve global clients from a UK base before we even think about going and opening up Amiqus Dublin or Amiqus Berlin or wherever, Barcelona or something. So, you know, we want to make sure that we've got a kind of 25% share in a different market before we would then go and open in that market. But for us, the other side of that is that we want it to be like a pull rather than a push as well, so that we would have enterprise kind of level clients who would be able to take us with them and say, this product is really great, like we have this other territory that we're working in, can you come with us? And we would kind of partner and go on that journey together. So there have been some signals for that so far, so we're definitely starting to warm the market up, so by the time this 18 months comes around, that we're a bit more ready to push the green button rather than it all falling over. So that's the plan.
Yeah, that's great and really clear and evident actually as you think about some of the clients you're working. I know you mentioned Barclays as a global business, for example. That sets you up, doesn't it?
Yeah, exactly. And also lots of our legal clients as well, they act globally, and, you know, as they're doing things like anti-money laundering and KYC and various things like that, you know, lots of their clients, they're not all going to be British, so we need to find ways of being able to verify the identity of people coming from all around the world to global Britain, and to be able to make sure that we can apply our PEPs and sanctions and watch list checks to everybody equally, basically. So that's getting all those foundations in place, I think, first is really key.
Yeah, absolutely. Is that your experience, Thomas? I know you're already starting to talk internationally, but those foundations are really well built in Bridge.
Yeah, I think, I think we're still, I would say we're unashamedly opportunistic as well at the same time. So I know that sounds pretty reckless, and the reason the reason I say that, right, I think we're so focused on the business at the moment is trying to kind of establish those unit metrics to build so that you can say, you know, if I add X or do Y, then we'll result in Z, if that makes sense. Ideally, we would love to get those absolutely proved out, and then we're saying, yeah, we'll move into this market, or we'll move in, you know. So if I look at markets that are good for us is like credit and debit card dominant markets, so US, UK, Australia. We've had a merchant, a customer that signed with us, and as part of it, they pulled different parts of their group in, and we're like, yeah, the good news is, guys, you're not just getting this part of the flows, you're getting everything. Mm-hmm. So I would say our international expansion has been accelerated by customer desire. Not that it wasn't in our strategy, but it's probably happened slightly earlier than what we anticipated. Now, the benefit of being software-based, cloud native, you can really do business anywhere in the world to an extent, as long as you can kind of service the client and make sure you're doing a really good job of that. So yeah, I would say we've been on international expansion opportunistic. However, what it does is it gives us a wedge into the local market.
Yep.
What I would say we've learned in like 6 months in those local markets has been huge, and it then gives you a kind of footprint to give you a bit more confidence to say, yeah, actually, the product market fit that we really strongly believe in the UK does exist in this other territory.
Yep.
Therefore, we're going to push hard into it when the time is right.
Yeah, great way to build that experience. And Mushin, from your point of view, as you think about the future of ZipZero,
I would just pick up on where Thomas has left off, because we're a software cloud-based business. So for us, internationalization it's relatively straightforward, and we've always had the intention to build an international business. And the pool we are getting from clients for the type of data that we're able to provide really validates that international expansion potential. And for us, the consumer value proposition will work the same way across the EU. So, in an ideal world, we have plans to be in at least 2 European countries by the end of next year. But the fact that we are software and cloud-based makes internationalization of our business relatively straightforward, because we might need a couple of physical people on the ground, but we don't need to open up physical offices anywhere. So we've, as I say, almost from day one designed and built everything to be as scalable as possible. Not quite at the flick of a switch, but not that far away.
Thank you. I think we're moving on. I'm seeing Susan go, that's it. So better pay attention. But please join me in thanking the panel for sharing their experiences. I'm just going to hand over to Michael, but what we really hope we've shared with you here is a glimpse into what the fintech capability is in Scotland, built on founders that are purposeful, with experience and ambition to grow, to scale, and to take their business globally. Thoughtful about the ecosystem and the opportunities that it offers, and able to provide that insight into the gaps and what we need to address. So thank you very much. Michael, back to you.
It's coffee time.